Welcome to today's market report.
European shares closed higher on Thursday as expectations of improving economic growth supported oil stocks, while drug maker Swedish Orphan Biovitrum was the top performer on the Stoxx 600 after accepting a $8 billion takeover offer. The pan-European Stoxx 600 index rose 0.3%, with oil stocks adding 1.8% as crude prices surged on optimism over an economic recovery, a sharp decline in US crude stocks, and a weaker dollar. Sobi surged 25.8% to the top of the Stoxx 600 after it agreed to a takeover by US private equity firm Advent International and Singapore's sovereign wealth fund GIC. Travel and leisure stocks rose 0.8% as they recovered from a recent sell-off on concerns over the Delta variant of the coronavirus, while automakers gained 0.3%. German luxury car maker Daimler fell 0.6% after it warned of significantly lower third-quarter sales at its Mercedes unit due to a global semiconductor shortage. Economy-sensitive industrial goods and services and the chemical and construction and materials sectors, which were all trading near record highs, rose between 0.3% and 0.6%. We find value stocks quite exciting. A lot of the stocks are quite cheap, according to European equities portfolio manager at Lazard Asset Management. But we are quite concerned that expensive stocks are very vulnerable to any shift in the environment, particularly if we were to see bond yields starting to rise. The European stocks benchmark is trading just a few points below all-time highs, with investors holding off on big bets ahead of US jobs data on Friday that could influence the Federal Reserve's thinking on policy tightening. The European Central Bank is set to meet next week, with some of the more hawkish members recently calling on the ECB to pare back its pandemic-era bond purchases. While strong earnings and a relatively high rate of coronavirus vaccinations have supported a European economic recovery, investors are wary that tighter monetary conditions and rising inflation could result in choppier market conditions through the rest of this year. GBP/USD is trading at 138.30 and is firmly through a critical dynamic resistance on Thursday's price action so far. The pound, in the absence of UK-specific data release or Bank of England speakers this week, has been moved by flows in the greenback. Cable rallied from a low of 137.67 and reached a high of 138.37, higher by almost 0.5% at the time of writing, as the dollar index sinks into bearish territory on the Forex board. According to the Currency Strength Index, the US dollar has fallen well behind as investors move into risk following Friday's dovish tilt in the Fed's narrative and US data disappointments earlier this week. Yesterday's ADP report, which missed expectations by a long way, has been taken as a potential prelude to non-farm payrolls in Friday's data. ADP private sector jobs came in soft at 374K versus 625K expected. As for non-farm payroll, the consensus currently sees 725K jobs added versus 943K in July, while the unemployment rate is expected to fall 2 ticks to 5.2%. Meanwhile, investors are also watching the UK's COVID-19 infection data. In the last week of August, Britain reported the highest number of new COVID-19 cases in just over a month, which could be a headwind for the pound going forward. The next resistance for the GBP/USD is 138.80. On the downside, a break of the support structure and then the recent lows near 136.80 opens prospects of a test to the August swing lows of 136.02. Eurodollar has moved up to third place in the Currency Strength Index as the narrative over the Federal Reserve has started to deteriorate ahead of Friday's key non-farm payrolls event. The daily chart sees the price busting out beyond trendline resistance, winding up prospects of a significant trend reversal. Depending on the outcome tomorrow, a healthy correction would be expected from within the support territory between 119.10s and the 118.70s. On the downside, the 50% mean reversion level aligns at the 118 figure as well as the prior resistance, which makes it a compelling level to watch. The dollar index fell 0.3% at 92.229 after falling as low as 92.219.
This is today's market news. Thanks for listening. We'll see you next time.